This is Craig Haugard with your Financial Issues Ag Update. Well, corn was stronger yesterday on a good volume day. I suspect that in the next few days we're going to be trading the weather forecasts. Now, the 5-day forecast puts rain in for the upper plains and eastern corn belt, while the 6 to 15-day model shifted sharply towards cooler and wetter, and that would bring in another round of moisture in the corn belt, especially in the next 6 to 10-day period. The next rain system could result in traders taking risk premium out of this market. In the weekly ethanol production report, it showed a reduction in production of 23,000 barrels per day over the previous week. My market year-to-date average production is running 10.3% behind last year. Ethanol stocks do continue to fall, and they're currently 12.5% below last year's numbers. In the overnight trade, we have spot corn futures trading a penny lower. Soybeans got off to a great start yesterday with the USDA's announcement of 2 sales of soybeans to China. One sale was for 453,000 metric tons, with 66,000 of that in the current marketing year and the rest in the 2021 marketing year. The second sale was for 262,000 metric tons, and that's all going to ship in the 2021 marketing year. Now, countering some of the bullishness was the ongoing drama regarding the Chinese consulate in Houston, Texas. China has threatened to close the U.S. consulate in Wuhan in response to our actions against their Chinese Houston consulate. On the export front, we had U.S. soybeans continuing to run at a discount to Brazilian beans. In fact, beans that are shipped out of the Pacific Northwest currently would land in China for about $11 per metric ton less than Brazilian beans would do. In the overnight trade, we have spot futures trading 4 cents higher as I record this. Wheat markets were higher as we had more rumors of China buying wheat and then the actual buying of wheat futures by funds. On the international front, we're hearing that yields in Russian wheat harvest are coming in about 7% less than last year. It appears as if the Russian crop may be lower than last year, with the USDA currently forecasting year-over-year increase of nearly 3 million metric tons. In the overnight trade, we have Chicago, Kansas City, and Minneapolis all trading a penny lower. The small gains that cotton made earlier in the week were all erased yesterday as cotton futures traded lower. At the close, we had the December futures down 41 points, settling at 62.54. In the overnight trade, I have spot futures trading 5 points higher as I record this. Livestock futures had a mixed session. We had the October live cattle futures ending the day 40 cents lower, while September feeder cattle were 30 cents higher at the closing bell. Lean hog futures were slightly stronger, with the October futures closing up 5 cents. Class 3 milk futures turned in an ugly session, with the August futures finishing down 54 points, settling at 22.76, and we're down an additional 27 points in the overnight trade. Meat cutout values were mixed on Wednesday. We had choice box beef 27 cents higher, closing at 201.15. Select boxes were $2.02 lower, settling at 189.28. Pork carcass cutout values were weaker as they finished $2.90 lower, closing at $69.33 per hundredweight. This has been Craig Haugard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.